Ladies and gentlemen, we are back. We still don't have an official name for the podcast, but it is myself, Tannor, on my, virtual right, the great and powerful Brad Freeman, and then below us, the very strong Evan, Stock Market News. Guys, how are you doing?
Me being below you guys supposed to mean something, or?
No, it looks nice with the two people that actually show their face on cameras, and then the anonymous.
That's a fair comeback. Fair retort. I'm doing great. I'm excited for this conversation.
But I mean, we could switch it up. I mean, it's perfectly fine. All right. So first off, Brad, how you doing?
I'm good. I'm in some mountains in Yosemite, so if the internet cuts out, I don't think it's going to happen. But if that does happen, I apologize. But nature is really cool. I like nature, so yeah. I guess I'll leave it there.
If anyone's internet is going to go out, it's probably mine. I'm seemingly the guy with all the technical problems here. So, but Evan, how you doing?
I'm doing fantastic. Markets are getting close to these all-time highs here. I am not near mountains, so my Wi-Fi should be good. Try to do more live streams, so I'm excited for this conversation. But there's a couple stocks that have had some big stories, a couple names that I know both you boys watch that I'm excited to ask on, and I'm looking forward to this conversation.
Yeah, I mean,
we also got a bunch of comments coming in here. I love when we got a live chat coming in, so definitely throw some comments in there during this. And also, wherever you're watching this, give it a like.
Yeah. A lot of familiar faces already in the chat. So we will queue up some questions as well, depending on if we have time near the end. We're going to try to shoot for a 30-minute show, but if you want our attention, it's also good to potentially just say that it's a question rather than letting us know that you're just talking in chat, so we can save it for later. But why don't we get started with something a little different? And by different, I mean right at home for me. SoFi stock just recently had a fireside chat. Didn't seem like anything was all too new, but we also had a pretty interesting debate in this last week around if SoFi is a tech company. Brad, do you have any thoughts on this as a topic? Does SoFi deserve a multiple versus other financial solutions companies, or?
Well, I don't have any opinions on this. I'm sorry. No, I have a lot to say, but I start off answering the question with I don't care. I don't think it's that monumental of a decision, what it's called. And I think the rate of profitable compounding, which they've uniquely done across cycle, which is not normal for banks or financial service companies, is what's going to matter for long-term returns. But I mean, at the same time, you look across, I mean, Fiserv and Marqeta and these pure play financial service software companies in public markets, and they get terrible multiples. They don't get a CrowdStrike level multiple or a Palantir level multiple. They're trading at 3-4 times sales, and then whatever margins they're operating in, you can extrapolate there. But so I think the debate on is it a tech company or is it a bank is a lot of fun, but I don't think it's very important. But my answer is still yes. I do think it is a tech company, and when you're running your entire backend soon to be on Technisys or soon to be on Galileo, I should say it's all Galileo now. That's not normal for a bank. When you're cutting all of these third-party fees associated with all of the vendors you have to pay for running every single API and every single integration that you're trying to do on your site, when you're sidestepping all of that's something a tech company does. And I mean, when they're a tech company in banking. So when you are a bank like SoFi is, I think they're a tech company and a bank. So I guess that's my answer.
Sure.
You win on input cost advantages. That's how you win in any commodity. That's how you create differentiation. So the fact that they're not paying all of these vendors all of this money to run their back end and to run their front end and to make sure everything's working is an edge and is something that only a tech company can claim to have. And I mean, that fireside chat with Anthony Noto, I don't think I've heard him speak more optimistically about tech pipeline in a very long time. I mean, he was talking about several late stage deals that they haven't announced yet, probably coming soon. They talked about multiple customers boomeranging back to SoFi after they churned and left, and we're like, wait a minute, this other vendor who could save us a few pennies is costing us a lot more dollars because none of this works. So we're going to go back to the other people and pay them a little more. And I think that the slow growth, the disappointing growth, because we can't call it anything but disappointing for the tech platform. You look at financial services and lending, and they beat and raise every quarter. And for tech platform, they've lowered their multi-year guidance. But I think we have to remember that all these things happen at the same time. They conducted a massive go-to-market switch where they're no longer chasing these kind of low-quality startups, and they're more chasing the H&R Blocks of the world and the Wyndham Hotels of the world to try to create these debit programs and other products that they're currently launching. So you had that go-to-market switch right when a regional banking crisis happened, right when they bought Technisys and had this massive integration project to conduct, where that's pulling a lot of resources away from innovation and product cadence rollout, which I know a lot of people have a problem with. But I think that will magically snap back and accelerate once they're not spending so much time and energy on integrating Technisys finally. And then also you had about 5 points of rate hikes happen at the exact same time, which, I mean, when you're trying to sell to any company's technology software, rate hikes make cost of capital more expensive, makes everything more expensive, makes money a little bit more uncomfortable to spend. So I think all of those things happen at the same time, and we are kind of just now exiting all four of these headwinds, this perfect storm that raged again, all in perfect harmony. Which is why I think you're hearing these green shoots and anecdotes about pipeline swelling, about several late stage deals coming to accelerate 2026 growth, about the boomerang note that I just mentioned. So yes, I do think they're a tech company, and no, I don't even think it matters. But those are all the reasons why I think yes, it is, and I'd love to hear your feedback.
I think it's a great point. I mean, they definitely are a bank. I mean, they have a bank charter. I think the important part is that people want to make sure that if they're investing in individual equities, that it's trying at least to outperform the S&P 500. And that to someone like Amit, who was on the opposite side of that debate, suggested that maybe they're not going to outperform because they have that stigma that they're a quote unquote traditional or legacy bank. I mean, I obviously am on the bull side of this. They are compounding, members, which is leading to revenue and then increasing margins like crazy. So I think that they're going to compound faster than an entire indice averaged out. But like you said, it really doesn't matter. I really do appreciate, as someone who is like public facing as yourself, is very calm in a sea of just like an insane amount of comments that are either saying like, oh, one day this is the best company, and then the next day it's the worst company to potentially invest in. You seem to keep a calm head. So
there's certainly some emotions with some pockets of retail for this name, and I know another name in financial services that we're soon going to talk about as well.
Yeah,
but yeah, and I just go back to, are they going to grow profit at a rate above the S&P 500 over the next several years? Do I believe that? Yes, I do. There's only so much multiple contraction from here that's going to happen at, I think, like a 0.5 or 0.6 peg price to earnings growth multiple currently. So you can take the multiple down a few more turns, but if they're going to compound profit at a triple digit clip for the next few years, and then at a 25% clip as far as the eye can see, that's going to outperform the S&P 500. If that happens, I'm not that's their guidance. There's always uncertainty, especially with multi-year forecasts. But if they pull that off, the rest will take care of itself, and it won't matter what we call the company.
One of the comments oh, sorry, go ahead, Evan.
I want to ask you guys, like, what's the moat here? Because, like, I know for me back in the day, just more from less on the stock side and more on the product side. For me, what made me not use SoFi was it was as simple as I work for myself, and the only way at that time I was able to kind of get all the features was through hooking up direct deposit, and I went over to Robinhood and kind of just went into that ecosystem. So it doesn't even have to be about Robinhood specifically, but this feels like a difficult space. Just
I can feel that, or Tannor, if you want to go for it.
No, I mean, I was explaining off camera to Evan that he can now, give them $10 a month to try to.
What do I get for $10? I actually really do need to know this.
Sorry, go ahead. Sorry, what
do I get for $10?
I mean, there's a slew of benefits. It really would start to compound if you have, like their lending products, because you can get discounts on their personal loans or stuff like this. That's where you're really going to pay back much more than $10 a month. But it's their APYs on their checking accounts, all these sort of extra products, rebates on margin, stuff like that. That's just added benefits as being a user.
Yeah, card perks, travel perks. But I think for me, the moat, it goes back to they're a financial services company offering products that are extremely similar to so many financial services companies in the United States. And how do you win? It is by being incrementally more efficient than the guy next to you. So they are the unique company that merges the legacy cost advantages of having a charter, and the cost of capital advantages that entails, and then the disruptor advantages of having no branches all over the United States, and the massive fixed costs and bloat and inefficiency that comes with. And again, tying that in a bow with owning their own tech stack and shedding all these third-party fees, which these other companies aren't doing. I mean, Robinhood is paying SoFi for part of their debit processing engine. So I mean, If you are combining all three of those things and operating more efficiently than your competition, you can pay people more APY. You can give them cheaper rates on loans. You can give them more card perks. And Robinhood's doing a lot of those things and doing them very effectively. But I mean, it's $1 trillion industry. So to say these two peanuts are gonna prevent each other from growing, I think is not based in reality. I think it's more so they're going to prevent Bank of America and JP Morgan and Wells Fargo and these massive behemoths from maybe getting away with paying 0.0001% on their accounts in perpetuity and never dealing with any kind of deposit churn. And they're still way too small for any of that to be visible in any of these companies, in the results of any of the companies I just mentioned. But I think that's where I see things.
If I'm pretty sure this is the case. Myself and Evan are Robinhood shareholders as well. Brad, I'm pretty sure you are not. Is there a reason why you've taken a bet on SoFi versus Robinhood in terms of this winner takes most market?
Yeah, so it's the fact that I mean, and I want to preface this with saying Robinhood has executed flawlessly for a few years now, ever since the GameStop whatever thing that happened with Vlad that he handled extremely well, got his face right in front of podcasts and answered very hard questions and was super uncomfortable. But I mean, mad props to him for that. But the thing that makes me uncomfortable about Robinhood is that they still rely. They're releasing all these amazing products and getting all this growth from these amazing products. But when you look at their financial engine, it is still predominantly powered by crypto and options. And so it is still very, very much so powered by insane speculation from the trading volume that their member base is. And you can, and for people who are saying I'm wrong, just go look at their income statement and go look at their.
You're right.
No, I know, but if anyone's saying no, you're wrong, just go look. But that doesn't matter when things are good and when the Fed's going to maybe cut rates a few more times this year, next year, and when unemployment's low and when people are feeling probably better than they did a month ago with geopolitics, maybe getting a little bit more comfortable, emphasis on a little bit. But I just think when we go to the next not fun part of this cycle, I want to be with the disruptor in the space, but the buttoned up disruptor that is catering to ultra prime credit with 750 plus FICO scores and $150,000 in average income, and I want them to be reliant on those ultra prime users, as well as things like technology sales, which should be slightly more resilient to macro cycles. You're still selling to other financial services companies, even if they do have some co-branded debit momentum right now. So that's not it. That will be cyclical. Every part of SoFi's business will be cyclical, but I just think the peaks and the valleys will be a bit more bearable and a bit easier to palate. And I think I really think when we fast forward 10 years from now, we're gonna still be arguing about SoFi versus Robinhood, and we're gonna look up and be like, oh my God, these companies both outperform the S&P 500, which is really, like you said, rightfully a few minutes ago, what we're all trying to do when we pick stocks.
Right. No, any other comments, Evan, in terms of yourself picking Robinhood over potentially SoFi?
Well, I think first the backdrop for me, like, I don't know if I really want to be invested in like the financial, in like the broker space. Like that's never been, like, I find it to be a very tough dog eat dog space. Like they're going to come in and do something new. So, my thoughts around Robinhood is the way that they're kind of able to solve that cost per acquisition user and get younger users. And I'm sure SoFi, I haven't really dug too deep into it, honestly, as I should have. But that was something that was always, very interesting for me. That kind of problem being able to be solved, and this whole kind of wealth transfer thing that I actually do kind of believe in and subscribe to. So, for me, I don't necessarily, this is not the area that I spend all my time digging super deep into. The Robinhood story, just as a user of it, it was just too good of a product. I'm sitting there with Robinhood Gold. I'm sitting there kind of as whenever someone who I'm talking with wants to get into the market, it's always Robinhood. So it was not a number one position for me.
What's your social circle, Evan? Like, think about what your social circle is. Like, who do you talk to? You talk to passionate retail investors who are picking stocks. And I'm
talking about my people outside of this, like the more kind of just people in everyday life.
Fair enough.
I don't know if, maybe a couple of them have had SoFi, but yeah, no, definitely a couple of them had SoFi, but Robinhood seems to be the first one. Yeah.
The brand.
Now, but that's also not the person Robinhood's making. Go for it.
Sorry, go ahead.
As I said, that's not the person Robinhood's making money from, probably, because Robinhood's, like you said, it is. You can look at it like actually for what LTM, a majority of their money came from option revenue. Then it's cryptocurrency revenue. That's actually net interest revenue, but
yeah, I mean, crypto has actually made the majority in the last few quarters. I think
has it. Okay,
they've gone pretty quick, and then on top of that, they just acquired Bitstamp and WonderFi. So their last two acquisitions were pure play crypto companies.
And obviously they're doing a crypto event in France, and they're really trying to focus in on that European area. So maybe they're using crypto to then also, hey, when Robinhood launches there, I know they launched Robinhood Legend in the UK. Maybe it helps them to launch there. But I kind of agree with Brad. I don't see Robinhood's competition as SoFi. I see it as these traditional Schwabs, TD Ameritrades who have moved really slow, who have a lot of money on older people who, where is that money going to go? I don't think it's going to stay on those platforms. I think it's going to be moved over to platforms like Robinhood.
Yeah,
and SoFi probably too.
Yeah. So when I say mostly crypto and options, I should have said transaction-based revenue, which is, I think, wow, it's like 500 million, almost 500 million out of 583 last quarter. So yeah, they are heavily reliant on transaction volume for these highly speculative assets, which right now is a good thing. But I want to be in the more conservative, less flashy financial service company, and I think that really is based in preference and is a highly subjective opinion. And if somebody says I don't agree, and I want that this company, I want my financial service disruptor to break things and apologize later and be the trailblazer, and I understand that too. So I'm not. I think it's important to say I think Robinhood's a great company and it's going to do well. It's just stylistically I side with this one.
Yeah, sorry. The comments that you just said about the 500 out of 583, what did you mean by that?
Yeah, so I'm looking on Q1 transaction-based revenue, Q1 2025. So options were 240 million.
Sorry. Okay. Yeah. Sorry. Yeah. I thought you meant total revenue was 583.
Total 583. Yeah, you're right. Yeah.
Yeah, because it was like 927 million or something, and then out of that, transaction revenue was 583.
Yeah. So.
But yeah, so overall, Brad,
just 53% of total or something like that. Or yeah, well, the exact numbers on important. They can go look. So I'll stop belaboring on that point.
No.
Even just look at
you more as
the crypto person. One. 2 quarters ago, it literally was, or 3 quarters ago, it was 61 million versus 252 million. This one, come and go pretty quickly. What were you saying, Tannor? Though, sorry.
No, I was just gonna say, like, you as an investor, Brad, cryptocurrency, does it play a part in your portfolio at all?
No, it does not. And I think I made a mistake on Bitcoin not having any, just because governments around the world are still endlessly printing money, and the administration that came in and said we're going to cut the deficit hasn't really done that. And I think hedging, I view Bitcoin as kind of a dystopian hedge of the world's ending, and I want gold and I want Bitcoin, like those two assets. But outside of Bitcoin, I think there's a lot of promise in blockchain and in tokenization, but in terms of buying Dogecoin or Fartcoin or all that other stuff, I think that's pure speculation. And I think it's smelly, no pun intended.
Got you.
I think Meta will end up giving you some backdoor exposure to it.
Probably.
They've talked about it, but
I think a lot of companies, and SoFi is going to as well, probably later this year. So
yeah. Which, I mean, if it plays out anything like Robinhood, will actually be a meaningful add to their financial services revenue, which is nice.
Tannor, I will say, I think this might make me a bad person, but like I see all these people doing these like Bitcoin treasury companies now, and it's like, all right, my company has failed, so let's just buy Bitcoin. And now I want to see the price of Bitcoin go down. And I own some. I have like 10% of my Ashley's like net worth in the cryptos, mostly just Ethereum and Bitcoin. Probably wish it was more just in Bitcoin, but damn, I can't lie. I'm like GameStop, DJT, whatever it is, this MetaPlanet thing. All right, we need 60K real quick.
You know what? I think that the more degenerate style investors can definitely stomach Robinhood as an investment. I'm realizing if you don't like to touch crypto at all, I mean, it's essentially akin to buying Coinbase. Like, it wouldn't even ever be in your consideration. What's actually funny, I saw this article today talking about Wedbush fund advisors have launched a Dan Ives Wedbush AI Revolution ETF, ticker symbol IVES. I mean, are we at the top here, or is this Is this peak or what's going on here?
We are not at the bottom. I don't think, but I guess just look at markets and obviously we're not at the bottom. But I mean that, and then Hamath coming out and saying like we're going to give retail access to pre-public companies and allow them to shirk disclosure-rich IPO process and give retail access without being accredited. And I'm like, wait a second, we did that 5 years ago with SPACs, and now we're doing it again. But so there are definitely signs of heightened speculation in markets. But I mean, then you look at across some other companies, and you have pockets of growth multiples under 1x, and Google trading at 18x that we talked about a lot last week, or 18 times forward GAAP earnings. So I think pockets of froth and pockets of still relative value, but that doesn't mean when the pockets of froth deflate, not everything's going to respond. But the beautiful thing about being a long-term investor is I don't try to time any of that. I just maybe raise a little bit of cash on the side when things are getting a little heated, and make sure I have a little flexibility to take advantage on the way down. But yeah.
Yeah. Interestingly, you brought up Google. We're not going to rehash all that, but they recently just bought a pretty expensive $32 billion cloud cybersecurity business.
Hopefully, we'll see. Hopefully, yes.
Hopefully,
second time's a charm.
Yeah, hopefully that's a good saying. In terms of cybersecurity names, we actually just got a lot of them announcing earnings. Most recently, CrowdStrike, but also SentinelOne, which was right after our last live stream. I know nothing about the cybersecurity names. Brad, you cover these pretty closely. I'm sure you probably hold some of them as well. Can you cover this space for us a little bit?
Sure. So CrowdStrike, SentinelOne, the core product offering that they've expanded from, it was endpoint. For Zscaler and Cloudflare, which I guess Cloudflare was more of a performance and gateway company, but they're now more of a network security company where they have a lot of offerings there. They expanded from network and trying to create what's called like the security operations center, where they're all trying to lump in as many products as they possibly can, to cross-sell as many things as they possibly can, to infuse as much automation as they possibly can, to keep their customers as sticky as they can possibly be. I mean, that's, I think, a good way to put it, simply for the sake of our show. But just zooming around earnings reports, you had Palo Alto come out, you had Zscaler come out, and CrowdStrike last night come out, all saying, yeah, macro is really not worsening for us. Like, things are fine. It's not amazing, but it's not worse than it was last quarter. And talking about very noisy environments, but all three kind of able to seamlessly overcome these noisy environments. And for SentinelOne, it was macro fell off a cliff in April, and that's why we missed our earnings. So when you have direct competitors, and they all offer cloud security products, they all offer identity security products. So while CrowdStrike and SentinelOne are traditionally considered endpoint, and Zscaler's network, and Palo Alto is pretty much everything now at this point, they all do overlap a lot, and they all do compete a lot. I mean, CrowdStrike just released a privileged access identity product that's going to directly compete with Okta. So companies that were complementary and partners are still partnering on large deals. Zscaler and CrowdStrike pull each other into large deals all the time, but the product suites are encroaching on each other's territory very quickly. So I think that means the macro headwinds and tailwinds that affect one company should probably pretty similarly affect all of the other companies in the space, regardless of if your largest business is cloud or network or identity or data protection or endpoint or any of those things. So when you have one company saying macro is bad and that's why we're missing, and all these other companies saying, well, macro is not that bad and that's why we're doing well, just screams that it's not macro, it's you and it's your execution. And for SentinelOne, I mean, we've had ARR accounting drama 2 years ago that they got past. We had CrowdStrike with a massive July 2024 outage where they basically shut a large portion of the digital world off. I mean, if you were flying a Delta flight that day, you did not have a very good time.
Yeah.
And still, you have CrowdStrike at 5x the ARR base, I think, or something somewhere around that of SentinelOne, convincingly outgrowing them on the top line, while they are still giving contractual concessions associated with the July 2024 outage, basically discounts and extended free trials and an incentive, basically. And I'm sorry, without cash, without draining their balance sheet, whatever they can do to preserve that cash pile while still giving a mea culpa. But all of this is to say that macro is not amazing, but when macro is not amazing, you figure out where micro is amazing, like where these companies are microeconomically thriving, where their fundamentals or internal value propositions are resonating on a deeper level. And for Zscaler and Palo Alto and CrowdStrike, the platform-wide adoption approach and the security operations center, all these buzzwords that they're using that change every few quarters, they're going very well. And their cross-selling engines are why they are significantly outgrowing SentinelOne. And I mean, it's strange. You look at these third-party tech evaluations from MITRE and Gartner and Forrester and all these third-party entities, and SentinelOne ranks very, very highly across cloud and endpoint, and their data lake scores very highly. Everything they offer. Purple AI is now, they say, the first agentic FedRAMP authorized AI chatbot, but I think you could kind of slice that definition a few different ways and say, well, CrowdStrike just got FedRAMP high authorization for their whole platform. But those companies are I'm kind of rambling now. Those companies are figuring out how to overcome not an amazing macro, and that just very loudly screams to me that you are making excuses and it is your fault and you need to look in the mirror and do better.
As an investor that's obviously curious about the space, I mean, I already know the answer to this. I'm kind of setting you up a little bit, but in terms of the total addressable markets and the overall potential for companies like CrowdStrike, how do you sort of look at that as an issue? Tell me about why you even got invested in that sort of sector in the first place.
Well, for me, it's the least discretionary piece of enterprise software spend. So it will do better across macro cycles than anything else, than anything it competes with, because I mean, maintaining and preserving your core assets is more important than pursuing growth or product expansion or anything like that. Making sure your ducks are in a row is extremely important. I don't remember off the top of my head, and I don't have the chart, but CrowdStrike's TAM and TAM is such a broad word that you can define in so many different ways. But their addressable market has gone from like 20 billion endpoint, 18 billion might be for endpoint, I don't know, but it's now over 100 billion through cloud expansions, identity expansions, threat and exposure management expansions. And the other really exciting thing about the space right now is that the absolute explosion in usage and proliferation of AI agents, that creates another asset that needs to be protected. And it creates another asset that is more rapidly scraping data from this company and this company and this company all over the web to make sure that they can conduct multi-step tasks and actually actionably, it doesn't sound good, but whatever, actually actionably create solutions in an end-to-end manner in a fully automated way. So they're not just saying, hey, here's the problem. They're saying, here's the problem. Here's the best way we think we should fix it. With your permission, we're going to go do it for you. And that is extremely powerful. And so as Microsoft Copilot and ServiceNow and Salesforce create this massive influx of AI agents and new assets that need to be secured, that is so positive for TAM. But it is finite, and I think that's why it's so important that you're not just an endpoint security company, that that Zscaler's not just a Zscaler for users company and a core network security company. You need to do so many more things so that you can not only find new customers, but you can cross-sell to your existing customer base, which is the cheapest revenue growth you can possibly pursue. You need to make sure that you're selling them more and more and more modules so that you don't look like SentinelOne and you're not just crossing up $1 billion in ARR and your growth engine's already slowing down towards 20%. So yeah, I think cross-selling is extremely important. Gen AI and agentic AI is going to be very important for TAM expansion. I think I'll leave it there.
Well, if I can just bring you back just a little bit. SentinelOne, obviously, very different valuation from CrowdStrike. How do you separate them? And one obviously looks better than another from a fundamental standpoint, but then on a valuation standpoint, kind of brings into question where investors should look to.
Absolutely. I'm going to try to talk and rapidly pull up numbers super quickly. But so SentinelOne is trading for, what is that, like $18 a share, 18 over 20. So it's like around 100 times earnings. PEG ratio is around 1x, but their estimates are falling very quickly. So we really don't know what the true PEG looks like because they've missed, I think, 3 consecutive quarters now. But
wow,
I think SentinelOne's right around 8 times gross profit. We have to use gross profit because they don't really make any money outside of that metric yet. Quickly inflecting, but still dividing by a number near zero. So 8 times gross profit, right around an S&P multiple. CrowdStrike's closer to 25 times gross profit, so almost a 3x valuation premium. But then you also look at the fact that SentinelOne's now slowing down to 21% growth this year and going to slow down to 20% the year after. And you compare that with CrowdStrike at a mid-20s growth rate this year, while they're still dealing with all of this stuff, all of these headwinds from the July 2024 outage, and talking over the last few quarters about how we are gaining more and more and more confidence in an ARR reacceleration, which they've already kind of started to deliver. Net new ARR vastly outperformed last night, which is the most important growth metric for that company. So I think I've learned over the last, I've still only been doing this for 7 years, but over the last 7 years that the best in class companies get large valuation premiums over second place. I think we're seeing that with across very, very many parts of the market. And I've gotten in trouble picking the second best because it's cheap. Where you run into problems like it's cheap because the estimates that we're baking into that multiple aren't actually realistic, and they're going to earn way less money. Or and then you see CrowdStrike way more expensive, but wait a second, they're beating and raising every single quarter, especially in profit last night. Really strong profit result. So I think it's very fair to say CrowdStrike is over its skis in terms of valuations, over 100 times. I think it's like 105 times free cash flow after last, actually probably closer to 100 after the fall today. But I think, I probably shouldn't be saying this, but I've taken over the last couple of years have taken a lot of profit in the position, and it's become a much smaller part of the portfolio. But I think it's such an incredible company and such an execution machine, and has such an elite management team, and just so many things going well for it, that I'm willing to own a company that's admittedly ahead of its skis in terms of valuation, and kind of selfishly rooting for a quarter like last night where their Q2 through Q4 revenue expectations are falling by like 0.2% or something like that, to be used as an excuse to create kind of like a 20-25% type multiple contraction event where I can actually finally begin to meaningfully build out the position. But I think I'll say that information for subscribers and keep them posted as always. But yeah, I think you could absolutely say SentinelOne is the valuation or the value play in this, which is so weird to say because they're really not making any money. But from a gross profit multiple standpoint, they are way cheaper. Which if they can figure out how to not have so much drama and headache quarter after quarter, if the Lenovo deal that they signed, which is a big deal for them, scales as expected through the end of the year, there could be a lot to like here. But right now, they need to do better. That's all I'll say.
So I want to add really quickly, and then Evan, I want your thoughts if you play any cybersecurity names as well. But like, Brad does not want to shout himself out, so he chose his name on here as Brad, partially his full name, and then partially his X tag as well, nerd. So I saw a bunch of comments saying, who is this? Where can I find him? In the comments, guys, on X, StockMarketNerd. So if he's talking about his subscribers, much more appropriate if you know what he's actually
I should be less cryptic in the naming. I apologize, but thank you for that. I appreciate it.
Evan, do you play any of these cybersecurity names? What do you?
No, first I want to double down on that. Both of you guys are great. If you're watching this on YouTube, make sure you subscribe to Tanner's channel. Go follow Brad. If you're watching this on Brad's channel, go like all his stuff. They also have, both of them. Check out, the links in their bios, all that great stuff. These are really smart guys, and I appreciate both of them. And yeah, cybersecurity was an area that, like, it's, I feel like you're kind of silly to think that this area won't expand. I do have questions of like, hey, in an AI world, does the type of companies that were doing really good in cybersecurity in a internet non-AI world, is that the same thing? Maybe not. We'll see. But I do know that hacks are gonna get more sophisticated. You're never like, if you cut in HR, or if you cut in whatever marketing, you're gonna and something goes wrong, you're gonna have a very different response if you cut in cybersecurity and something goes wrong. Like, this is the type of thing that you get fired for pretty aggressively.
Or you send $10 Uber Eats gift cards as an apology for.
Yeah, that even goes through. I used that as my first opportunity to get exposure to cybersecurity. So I bought a little bit of CrowdStrike with my average cost around $271. And it really wasn't anything crazy. It was just, I knew I needed some exposure in the space, and the number one name is down whatever percentage. All right, let's just start buying a little. And I also look at a hack. When you tell me every Delta plane is down, every this, the whole world is down, like everyone's taking off work because, this one cybersecurity company is down. Like,
it was a software update bug that they just completely messed up.
Yeah, self-induced.
Yeah,
exactly. So I see that as a good, that shows the importance of this. Maybe it makes you start to think of, hey, can you do, like, should this company be trusted with that? But I mean, I think clearly they're one of the best options. So, it wasn't a hack, quick fix, or a year or two later. Like, that's not the type of thing that knocks these best in breed names off. And when Brad's talking about, this winner in the category getting that huge valuation, and in the second place, like, just looks so cheap. There's so many examples of it. My mind went to, everyone's telling me about AMD right now. I own a little. I'm falling into the trap, but we'll see. There's a couple.
Hey, Lisa Su's a good CEO. I like, oh, not 90 times free cash flow for CrowdStrike, not 105. I apologize, but still same. Everything we just said applies. But sorry,
Lisa Su is great, but that's the exact example I was going to bring up about picking the first place versus second place. I mean, if you actually look at the market cap, AMD seems like a screaming buy. Once you actually take into account their multiples and their earnings, it no longer looks like that much of a screaming buy. I mean,
Uber lift, like, yeah, so many cases. Yeah, sorry, go ahead, Tanner.
Robinhood, SoFi.
No, I was about to use some profanity, but I
thought that was just funny though. That's a good one.
No, but I mean, it is the case over and over and over that the second place is sometimes not the greatest, way to invest. And if you actually look at my portfolio, I mean, I've been a long-term Shopify shareholder, long-term Nvidia. Tesla actually just recently sold, but all the reasons for, yes, they're very expensive businesses, but they're also first place, and they most likely going to keep that market share. But
winners win, man.
Sorry,
winners win.
Winners win.
I mean, I think I've been calling Cloudflare expensive since its IPO like 6 years ago, and go check out that stock chart. So it is for the record, it is very expensive, but I mean the company is incredible. I mean, Cloudflare versus Fastly, same thing. I mean, yeah. So many examples just like that.
Yeah, I mean that's the I think a good case for the bulls for Palantir as well.
Sure.
So clearly they're dominant in their space. I'm not a shareholder of the business, but I just find it kind of hard whenever you're talking about these very expensive businesses. Not to shout out Dan Ives or anything, but I think that it's a little bit aggressive to say that this will be a $1 trillion business in the next 2 to 3 years. I mean, yes, multiples can be stretched, but like, in what world?
We're banking on a lot of massive beats and raises on future earnings reports from them to make valuation kind of make more sense and just not stubbing their toe. And to people who have banked on that for the last 18 months, man, oh man, have you been right? But you kind of need to keep being right, I think.
I agree with you completely. One thing I will say, the winners winning aspect of it, I think one thing it also comes down to is attracting the top talent. And, Silicon Valley is, I'm sure, a very diverse audience. Maybe a lot of them lean left, but there was, I'm sure, a large swath of them of really talented people who felt a little disenfranchised and have kind of created themselves a little bit of a home. So I think Palantir's ability to attract top talent who are mission driven and kind of get up and are just excited about the project and not just the money coming off of it, I think is an intangible that now it's not going to justify certain valuations, but that's why I feel a little bit more safer holding some of those.
You're right. Their culture it kind of reminds me of Apple under Steve Jobs, in just a very different market and very different environment, but just culturally aligned people and mission driven. And yeah, I mean they've been. I mean, our AIP has been, I think, the most impressive launch from the software layer, not Nvidia, not counting Nvidia GPUs, but in the software and app layer, I think that's been the biggest home run in public markets so far since the Gen AI explosion began.
Were you guys impressed by Nvidia earnings? I was pretty happy as a shareholder. Earnings call in general seemed like one big note to the current administration. But I mean, as a shareholder right now, the way that I'm sort of playing this is that the China bear case is fully baked in terms of people's understanding. Like, it's not going to get any worse, in my opinion. But there are rumors right now that it could get a little bit better, potentially opening up, B30 chips for China, something like this. If this does happen, I think that could be a massive catalyst for Nvidia. I'm still like you even talked about attracting top talent. That was one of the big things that was talked about in the earnings call for Nvidia was, hey, why are we even letting Huawei get any sort of strength here? Why are we making great AI top talent go over to our rivals whenever we could potentially write the future layer in our language, an American company rather than some international business? But I'm curious what your guys' thoughts were on Nvidia as well.
It was a weird combination of, we love what they did with relaxing Biden administration rules that let them sign the sovereign AI contracts with UAE and Saudi Arabia, and then saying, but on the other hand, this was really, I mean, for lack of a better term, dumb. And I won't get into picking sides because it's super political, and I stay away from that. But in terms of the actual quarter, we spoke super briefly about what matters for gauging Nvidia runway last week, I think, and it's tech lead, which looks really good, and it is compute demand and compute and networking demand, I should say, which both look very good. And when you have, I think they moved from these agentic reasoning models are no longer consuming 100x the compute of the one-shot inference models. It's now 100x to 1000x, and I mean I think that's just going to keep snowballing. So the runway looks pretty good. To quote Larry David, pretty good. So yeah.
Are you not? Are you still not a shareholder? Not looking at anything?
I don't know, man. I don't know what I own or what I don't. I don't know.
You're not interested in buying.
I have to refrain from answering those questions most of the time.
Got you.
Yeah.
But
I'm congratulating people who do own shares if you do. So good for you.
Yeah.
I mean, what was it like? What was the stock price like 3 years ago, split adjusted? What has there been it's been absolutely insane. I mean, just wealth makers,
Nvidia average cost.
Are you saying that as a reason to potentially not take new share in it?
No,
or no?
Not at all. I mean, I don't have the valuation off the top of my head. I think it's like somewhere around 30 times forward earnings, and the earnings CAGR expectations are well over 30%. So I do have it now. So it's 29 times forward EPS. They don't really do much non-GAAP adjusting. So that's a pretty solid multiple. And in terms of the next 2 years of profit growth, you're looking at 43% and then 34%. So the peg is still under 1. So it's for me, it is a matter of how long does the Gen AI runway last, and everything they said on that call bodes very well for it not ending anytime soon.
So one thing I will add, like I don't even think it's just, well, first of all, on the China thing, with all this AI stuff, he who holds the Taiwan semiconductor chips can make them. So as China is on some crazy back generation for them to catch up with Taiwan semiconductor, they'll already be ahead. There is no real way China can make their own chips at this point in time.
They need like 5x. It's something like 5x the amount of power per data center than we currently need to run it. So they need, I think, like a 5 gigawatt data center to do the same thing that we can do with a 1 gigawatt data center. So they'll keep investing. They'll close that gap. But right now, Nvidia
always be behind,
is king and then some. So
I wouldn't be as brave to say that they'll always be behind. I mean, from what I've been reading from the real experts in this field is that China has.
By the way, go ahead. Sorry, go.
Sorry.
Which I am not, by the way. I don't spend that much time in this sector, but please continue.
No, just that they've definitely advanced pretty quickly as of recently. And if you look at the other fields that we've potentially given them, whether that's battery technology, green energy, EVs, 5G, I mean, we've had advantages versus China in the past and then have given up those leads. So yes,
electric cars, yeah, it's a great example. You're so right.
So I just think the people who have counted out China, I just don't want to bet on that future. And I'd rather Nvidia just sell to them too. They said it's a $50 billion market for them. That's American jobs. Those are taxpayer dollars. I just, if you want to sell them the Hopper chips and keep Blackwell for the rest of sort of American own interests or American allies, I get that as well. The difference in power is like 30x. I mean, it still, I think, would be okay, but they really don't want to allow China to have any. And that seems like they're trying to defend IP or something. But I mean, they definitely have one of each. Like, I mean, they can pick Blackwell chips apart. They understand what's going on inside. It just, I don't know.
So I hear you, but like, no one else has really been able to come up and compete with Nvidia on the design of the chips. You know, no one else has been able to compete with Taiwan Semiconductor on the manufacture of them. No one's been able to come up and compete with ASML on creating the machines to go and do this. This is a really large system for for China to come in and catch up on. And I have something I'm trying to share here. Like, yeah. I think the point is this is here right now. Amazon is preparing to test humanoid robots for package deliveries. All these GPUs, all this whole expansion over the last has been, how is AI going to help me online? We don't always think about full self-driving starting in June. We don't think about Optimus, how far away it is. Maybe it's super far. Amazon's also going in this area. What we know what's about underpowering all of this. It is NVIDIA GPUs. And Broadcom's been getting some love on some of this stuff. But I think also there is a step change on also like online from chatbots to agentic AI to real world AI. And all that's going to be continuing using more and more chips. And yeah, China might end up catching up, but it's a really wide system to catch up on. It might take them a couple of years. And the market seems to think this stuff is coming out within that landscape while China is still behind.
Yeah. And
So
I mean,
yes, they should sell to them, but I don't think China's going to be able to catch up in that time. And I think it is stupid that we aren't selling to them. But
yeah, I mean, Broadcom's networking equipment is best in class. Marvell and a couple of the ASIC or custom chip design or manufacturers, or not manufacturers, but sellers, are best in class in the United States. So we do have these hardware advantages. And I mean, Nvidia software ecosystem and the optimizations on GPUs that drives it lengthens that gap. But I mean, they have a lot of money. They have a lot of people. They have a lot of AI researchers. They'll have good products. But in terms of catching Nvidia, I would put more money on AMD figuring it out than anyone there personally.
I'm a Google shareholder, Evan. I don't appreciate the comments that you said about full self-driving starts in June. It's already happening.
We had this talk last time. San Francisco, it's here right now. Like it is. It's coming quick.
Yes, it is.
And
you're so right.
Autonomous vehicles are here. I rode in one. No one was in the driver's seat.
Were you nervous?
more and more
a little nervous, or like a little like, I don't know.
Legitimately, not at all.
Okay,
not at all.
I think it would take me a couple times. I would do it, but I would be kind of for the first couple times, and then I think I'd be fine.
I adjusted very quickly. It felt like being in the back of any car that you don't have control over. You know, like you're in someone else's hands. This time it was a computer, though.
And you can backseat drive and yell at them to do things you want, and no one gets mad. So I feel like that's my favorite. That would be my favorite.
You get control of the music, the temperature, everything. It's actually kind of nice.
No
and
one
the driver,
talks to
at least in Arizona, yeah, exactly. It was pretty like they weren't aggressive. So like it definitely did feel safe.
Yeah, I mean that's a pretty interesting space, but we covered it pretty well last week. Are there any other comments from you guys before we wrap up?
No,
we did an extra 50 or so % here.
Yeah, I just really think like going back to SoFi and Robinhood, I think it's so important for people to be able to disagree on things and not see eye to eye, and then like shake each other's hands afterwards and smile and walk away. Like we're picking stocks, we're picking companies, we're not attacking each other personally. And I think hopefully that reigned through, and that was very clear throughout this event. And again, I think they're both going to do very well for the long term. So just
Michigan does suck though. That is for sure.
Yeah, well, I guess we don't suck. We don't suck so much that we can't beat you 4 times in a row, including as a 20-point underdog on the road. But let's leave it right there. Let's cut.
Ladies and gentlemen, this has been the Unnamed Podcast with co-hosted by the great and powerful Brad Freeman, Stock Market Nerd. Check him out on X, and Evan, Stock Market News. You guys got to put your X tags. It's just Stock Market News, but under the thing. And I'm on YouTube and X, but I don't really post all that much. Thank you all so much for watching. Really do appreciate your time. But bye for now.